Hello, America. We have a new president-elect, and the Fed has made their decision with Chairman Powell. And depending on who you are, you love him or you hate him. So,
Maybe a little bit of
Willie,
both.
Willie, what a fascinating past week that we've had.
Oh yeah.
It was extremely busy, and it just so happened that the first week of November was just a complete clustered you know what. You have the presidential election along with a vital election for the Senate and the House. We'll talk
hmm
about the results here and how it is going to affect the economy as well as geopolitical, because obviously geopolitics affects the markets and the economy. We'll talk about the rate cut
Yep.
and what we see coming from it. And then we have some ideas thereafter and some other data points we want to bring out that validates why we continue to be skeptical of the
hmm
Fed's decisions, especially since September, and then how the new administration is going to impact what our predictions are and what we expect. So first things first, the election. Uh,
Yes,
so we
finally. Either
so
you loved it or you're crying, depending on what side you're on.
yeah. I mean,
But
look, we're not getting into politics here. We will
the,
not.
the only color we
We
see is green.
exactly. We respect everyone's votes. We're just happy that if you voted, that you let your voice be heard and you participated in democracy. So we're very happy to hear that the turnout um, was pretty good. I
hmm
don't know if it was a record turnout or not, but it's
I don't
just
think so, but it was more than normal, which
yeah,
still pretty sad that it's not 100% of all eligible,
right,
but
right.
something's better than nothing.
Yes, regardless of who you voted for and the results, just continue to have faith in our democracy, in our country, in America. We are the greatest experiment, and that's still going on. So we have to remember that. And despite all the things we've been through in history, right? We've been through a lot in our young history. We've always have gotten through it. So please keep the faith. But aside from that, so now we have President-elect Donald Trump, who will have his second term starting on January 20th, 2025.
hmm
So obviously, there's a lot with that. Aside from social issues, the economic issues,
Yep.
uh, and the Senate has flipped to Republicans. I think right now it's 53
Yep.
to their favor, and the House is tight, but it looks like Republicans will hold with a razor edge.
Mm.
So it's a red sweep, and the red sweep, for those listening, meaning the Republican agenda will be easier to push through, because obviously when you put legislation on the floor, you need the House to vote for it,
Yep.
approve. They need the Senate to approve, and once those two approve, it gets to the president's desk, and once he signs it, then it becomes law. So for those listening, that is an important thing to know, that once the House is confirmed
Mm.
red, it would be a complete Republican dominated chambers, DC. So that means that their agenda will be much easier to get through. So what
No
that does,
excuses now.
no, there's no excuses, right?
Yeah,
So
no
what
finger pointing, nothing. You either get it done or you're fundamentally failing.
exactly? So what does that mean for the economy, and then what does it ultimately mean to our listeners, right? Those listening, whether you're an investor, an average Joe, or sophisticated investor, or whatnot, what does that mean to you?
hmm
So the Trump platform and Republicans, what they were running on is that the economy has been really poor the past 4 years. We saw that as well.
Yep.
Obviously, inflation has been a problem, which affects cost of goods. Geopolitical tensions across the world has also affected supply chain and the cost of goods. Housing is a big issue. It's been the unaffordability, if that's a
hmm
word, is is all time highs.
Yes.
People cannot afford a home. The average age, we saw from Wall Street Journal, of home buyers has risen to
Yeah, it's in the mid
56 years
50s.
old.
You're
Yeah,
56. Yeah.
56
Wow.
is the average age now, which is all time high of new
Yep.
homeowners, right, or homeowners in general. So that is probably the biggest reason why the Republican platform won, right? Why Trump won was because of the economics of what they're running
Yep.
on, right? Which is to lower taxes, deregulate, bring costs down, more jobs, and all that, right? So that was the main platform, and I think I think the results of the election reflected that, because when you swipe your card to pay for groceries, or you pay your mortgage, or utility bills, or your insurance payments, your car payments, going out to eat, everything has just been much more expensive. But let's take a step back, right? So
Mhm.
before we get into the policies here, I mean, Willie, you and I have talked about this. We published it many times in our criticisms of the Fed. And look, the Biden administration, also inherited shit as well. So we have to give
Yep.
them a little bit of a runway here, is because when you inherit also COVID,
Right.
and everything, it's a little bit of a tough position to be in. So you can't fully blame the Biden administration, but you can partly blame because of their policies that did not ease the situation of inflation. So
Right.
for our listeners, this is something that's very uh, uh, forgotten about, and why people go, "Why are things still expensive?" Right, and why we criticize our friends in Wall Street as well as down in DC, is when COVID happened, right? You saw a major inflation spike, right? A shock. What was it,
Yep.
between 20 to 25%, Willie? Something like that.
Well, it was something like that. The inflation started the runaway once the stimulus began, and for the
Right.
record, like, yeah, we absolutely criticize the Federal Reserve constantly and
Rightfully, yes.
rightfully, but at the time, circa 2020, that was the biggest public health pandemic in decades, depending on how you define a pandemic. Certainly the biggest since the Spanish flu. Yeah, the economy was grinding to a halt. I think then, and I think now, the Trump administration and the Federal Reserve probably did the right thing when it comes to stimulus, slashing rates. And people are got to remember, in 2020, I think it was like March to June, the market crashed like 30 something percent, and it still finished the year up plus 11.
Yeah.
So simple arithmetic. But the I think the biggest mistake that happened was that they thought that the Phillips curve no longer exists. They thought they could keep low rates forever and keep injecting M2 into the economy, and inflation wouldn't ignite. And an interesting factoid that I read, it's a couple years old now, so it's no longer as shocking. During the pandemic, during 2020, I think it was like 20% of all the money ever created in the history of the US was created in like a year, like some ridiculous figure like that. You can't.
Which is crazy.
It's insane, and you can look on the Federal Reserve's own database, which is free and public,
Yeah, and you see
and
a
you can see the
massive
jump.
spike in the chart.
Yeah, it's like
Yeah,
a vertical line. Uh,
it's an economic federal dollar boner, is what it is. It's a cash boner that America had. Later Liberty had a major boner during that time period. Yeah.
my understanding of statue anatomy must be limited. But I mean, yeah, you cannot. It is not physically possible to inject that much capital into an economy. And basically, now the Fed, or then the Fed, became an active participant in bond buying. You can't take those sorts of actions without having inflation result. Okay, period. And the thing that we keep harping on, it's okay to do that. Again, they did the right thing from an admin level and from the central bank level. They did the right thing. But you can't sit back and do nothing. And you want to talk about pricing, yeah, okay, whether you do CPI or the chain index or whatever, if you look at price levels from 2020 to now, if we had maintained the 2% annual inflation, they would have increased about 9.5%. They've increased over 20. And
Right.
again, I'm not making this up. The Fed's own data. Okay, so it's the inaction, and that's the problem. When you get into this corner of easing, everyone gets addicted to the good times, right?
Right.
We saw that pre 08. We saw that after 08. We're seeing that now. no one wants to take the hard pill. Okay, and the longer you wait, the worse things get for Americans. And you're seeing that right now. We've got credit
Right.
card debt at all time high. We've got personal interest rate payments at all time highs. You know, we'll talk about the Fed pivot here.
Yeah.
Eventually, you know, the Fed cut rates in September, and the 10-year Treasury spiked.
Right. And that's
Nothing
the
is
thing,
making.
right? Right. And that's the point I was making there with, and you add a lot of good light to it. It's, to simply put for the general population listening here, why their food and everything is still expensive, right? Because, the headlines you see, oh, interest easing, and all that, right? Because that's what you see, right? Job market's strong. You're hearing inflation's easing, but part of that reason and why things are still expensive is when you had that spike, right after COVID of inflation. Let's say it was what 20%, right? So, but since then, right? So let's say now your dollar now is $1.20, right? The same item you bought for $1, let's say it's $1.20 now.
Yeah.
And inflation, but since then, inflation continued to go up at like 7% and sort. So now it's $1.27, right? So it kept going up.
Yeah.
And then when the Fed says they're looking to ease inflation to bring it down to 2%, it's still going up since then.
Yeah.
So this says $1.29, $1.31.
Yeah.
But then the goal is to ease that so instead of like 2 cents or 4 cents going up, they want to go up a penny or two, right?
Yeah.
But the
Now
problem
from
is
this to this.
right. But the problem is you still haven't addressed that spike, and
Yep.
that's why everything is so expensive,
Yeah.
right? And I remember saying this to a couple of people, and then that aha moment. And I think that's the problem with a lot of our financial media friends or those in wealth management or those in finance in general, that they don't understand that that wasn't addressed. And what we're seeing now is just all sugarcoating, right? You
Yeah.
haven't addressed that. And that's why America is hurting, is because they're still paying that. I call it a COVID tax, right? Because
Good name for it. You should trademark that.
right, because if you address that, let's say it was 20 cents to that dollar, if
Mm-hmm.
you address that down back to $1, that takes care of a lot of the issue with grocery prices, insurance prices, utilities, right? Because you have addressed that tax in addition to the weakening of the dollar, right?
Yeah.
So you had all those factors playing in addition to, the wages and the job. I mean, it's just a giant pot of goo, right?
Mm-hmm.
That it was just brewing. But I hope that helps explain to the listener of why everything is still expensive to go to the grocery store when you see the headlines, oh, inflation's easing. It's
Yeah.
the inflation easing just means it's still going up 2.1, 2.2%. It's just they haven't deflated that 20% or so, however that much it was.
Right.
So, but to add to your point about inaction, which is a major problem, is this inaction has happened since '08, right? The problem with our economy and the problem with America and our money issue and Wall Street money bag issues um, is inaction and appeasing to the easy money
Yep.
and to the short-term near mindset that we fucking despise, right?
Yeah.
It's like, this is why I don't like 90% of our peers in Wall Street, right? They like that quick
Only
Coke bump.
90?
I mean, that's why I love Coke, right? I love the Coke bumps, and they think short term because they want that short term gratification instead of like, okay, we have to look at this from a long term standpoint, and we got to resolve this, right?
Yeah.
So since '08, right, what happened was since '08 is interest rates were at practically zero, right? It was pretty
Right.
much easy money, easy money, easy money, all the way through to 2020. 2020 hits, inflation spikes. What happened? More easy money. You had to, right? You had to do it.
You had to cut rates to save the economy, but you
Right.
can't leave it like that.
So you added on top of that easy money, more easy money at a historic level. So
Yeah.
then you had that. Okay, so now you have that. The Biden administration comes in, right, and they didn't address it at all, right? They, to Powell's credit, they did bring up interest rates to a certain level, right?
Yeah.
It's just, in our opinion, it wasn't quick enough, and it wasn't enough at all,
Yeah.
right? I think at that moment, COVID time was the perfect moment of a Volkner like situation. It was a get out of jail card for the '08 crisis, right? Because
Yeah.
I thought, we thought, you and I believe Bernanke did the right thing in '08. You had to ease that money time because it was a crisis.
Yeah.
But what should have happened was then they should have reined it back in, right? So, okay, no more easy money. We got to get back, to it and then ease it and then balance the budget there. But that
Mm.
didn't happen. COVID
Right.
happened, Trump administration, and they did what they had to do, easy money, all that kind of stuff. But then nothing was addressed. So, bottom line here, America and Wall Street, I hope you're listening because a bunch of fucking morons, and DC as well, is too much easy money and inaction and politics, right? Because look, Trump administration didn't want to look bad. Biden administration didn't want to look bad because you always want to be that administration that helped the economy and it was easy
Yeah.
money and all that kind. You don't want to be that administration that was the one that had to spike interest rates like crazy, put the country in a major recession in order to get back to it. And to our
Yeah.
listeners, that's what has to happen. That's just basic economics 101. Whenever things go like too good, right, and things get too inflated and all that kind of stuff, the only way to address it is a major grinding halt, right? Because it's just simple supply and demand. And that's
Yeah.
what happened with COVID, right? Was the reason why it was an issue is when all of a sudden things come to a halt, all of a sudden people aren't buying as much, they're at home, they can't go out. All of a sudden you have way too much supply and not enough demand, right? And so that was the problem. But then the goal was then to try to get back to it, right? But now what happened during COVID? Suppliers cut supply, all those sorts of things, and all of a sudden demand came surging back up. So you
Mm.
had major inverses happening during that time period. But the problem was the Fed and the administration did not address it appropriately and timely enough. In addition to Biden's more regulation, which I thought was not the right timing, and more policies that, in my opinion, provided more of an economic mess. So,
Mm.
in general, overall, in our opinion, I think politics aside, the Fed needed to handle it. And most of the problem was the Fed, but also at the same time, both presidents should have set the tone, right? And I thought
Absolutely.
the Biden administration didn't do it enough, and I think the new administration with the Trump administration, my hope is yes, deregulation is good, cutting taxes is good, and that better not just be on the top. You got to do it for middle class. More jobs is great. Driving more money back into the U.S. is great. All that's great.
Yeah.
Tariffs, we both can talk about that here shortly. I have a balanced opinion on that. But we just need someone with the balls and the backbone to say,
Mhm.
okay, look, we have to sacrifice the next 2 years. And look, it's his last administration. He has the ability to do this. We're going
Yeah.
to have the backbone for the next 2 years in order to accomplish what we need to accomplish. We have to hike interest rates like crazy, put policies in forth that cuts the spending
Yeah.
in order to bring this back. Because if we continue the way we're going with the printing of money, with the consumer debt plus the government debt, we're going to enter a major crisis that is going to be something, in my opinion, close to the depression.
Yeah.
Because government needs to grind to a halt spending, consumers need to grind to a halt in spending, because that's the only way to then balance inflation as well as the yields. I mean, like you said, right? The problem with the yields has been when you cut 50 basis points in September, but yet treasury yields and mortgage rates spike. It
Yeah.
shows you that there's a spending and money problem,
It
money
means the
supply
markets
problem.
don't believe you anymore.
Yeah,
You
and
you have no more
yeah,
credibility as a central bank.
right,
That's exactly what happened.
and there's fear and there's fear of debt, right? And there's the
Yeah.
fear of that debt, and on top of that, the markets are also acting idiotic as well. Wall Street, right, with the way they're
No.
but the way the stock market's going up and the valuations are absurd. Like, okay, we hear people say, "Well, they're beating earnings and all that." I'm like, okay, but their valuation still doesn't justify, and when the S&P is trading at 50 plus X, that's way too high.
Yeah, no,
So
the markets are insane.
so something's going to break, right? And you and I just have the fear of the debt, both consumer and federal, not being addressed, and all this printing still happens, and it's going to be there's only so much U.S. is power can take us,
Right.
right? There's only so much that a sovereign nation like us can go. I mean, look at history, right? Many parts in history and where, yeah, you thought an empire was so big and strong, the currency is the strongest, but they themselves imploded, and look what happens, right?
Yeah.
So
That's how empires
we,
fall. They can't pay their debts.
yeah, so
That's
we as
literally what did
America,
Rome in.
yeah, Rome. I mean, every great empire, right? The Asian empires, the Greek Empire, the Roman Empire. Like, end of the day, money matters, right?
Yeah.
And we need to address it. And I just hope and pray that people have the backbone to be able to do it. Luckily, with us, we will be obviously advising in many aspects of the new administration as well, or
Yeah.
have input to try to say, hey, look, we got to grind this to a halt here to try to do that. And because look, it's great what they're wanting to do, right? Cut taxes, all that kind of stuff. But at the end of the day, it's just like with the job markets that you and I talked about, right? Um, more people than ever have two-time full jobs, right?
Hmm.
Participation rates at all-time lows, and meaning people just gave up.
Yeah.
And part-time jobs are all-time highs too. Like part-time jobs are crazy. And the problem with that is you can't just. And the reason why I mentioned that is people are demanding. They're striking. And they're demanding more higher wages to pay for things. We can't blame them. Absolutely
Right.
not. And the problem is, okay, the government says, oh yeah, higher wages. We need higher wages, right? The problem is the wages can go up, but if inflation continues to go up and the value of the dollar continues to weaken, it doesn't matter. It's a rat race. And that's
Yeah.
where we're at right now. America's economy is in a rat race with deficit spending, with consumer debt, and with inflation not being truly tamed.
Hmm.
And it's all over the place, right? And no one has a grip on it. So somebody needs to get a grip on it. Congress needs to find ways to cut spending
Yeah.
um, efficiently, and then consumers need to start cutting their spending a little bit. But again, we want consumers to spend, but just responsibly.
Yeah. Well, the robust consumer or resilient consumer, whatever headline nonsense you want to quote, I guarantee you that's being driven A, by credit card, and B, by BNPL. One of
Yeah,
those is in the light and gets reported and accounted for in economic models, and the other one are run by the idiots that you want to debate on Bloomberg,
yeah, and the offer's
which,
still
which
on.
I really hope you do. I'm going to
Yeah,
sit those
Affirm,
top.
Klarna, all you fuckheads, I challenge you into a debate. I do despise you. I think you are, you guys claim that you're good people in Wall Street, but you're just like same people. I mean, look,
Why do you
you
hold
know,
back?
yeah, it's disgusting that oh, by the way, they put like, oh, it's $50 minimum now that you can use the
Oh,
BNP.
two
And by the
pieces.
way, yeah, sorry. I'm like, okay, sorry, $50 now. To me, it's just irresponsible, disgusting. And that's part of the thing that is, where regulators, where we want deregulation, but that's something that should be regulated, which is
Yeah,
buy now, pay later, BNPL, right? The fact that they don't get reported is also scary. And people are using at all time highs now. Like it's increasing every quarter in significant levels, which again is an indicator of how the consumer is. Right, savings accounts are drying up, credit card debt's going up, personal loans are going higher, BNPL is going up. So it's a problem, and for
Christmas is
people
right
listen,
around the corner.
right, and then for people listening, when people say consumer resilience, right, and economy is okay, like government spending is what's holding up consumer resilience. That's what people have to
Yeah,
remember here. So if people understand how the economy works, usually when the consumer spending slows down, how does the economy stay strong? Government fills in the gap,
yes.
right? That's usually how it works. So the consumer resiliency is really bullshit because it's all covered by debt. And look, we're all for reasonable debt, right? There has to be some kind of balance there. We're okay with that.
Yeah.
But when it's too much, and then now you have government out, spending too much at the same time as consumer to try to catch up, it is not adding up, right? It's again another rat race. So as consumers weaken, governments are have a spending issue, but now they have to spend more because to fill in for the consumer lack of spending is an issue, right? Because government's hiring all-time highs, they're paying for these initiatives to try to fill in the gaps and all that kind of thing. It's just very ugly.
Well,
So
people need to understand most of those jobs reports, the job openings are being led by government. Like government in rational times is supposed to be what's called the lender of last resort, which is exactly what it sounds like. Okay, you expand an economy with private sector debt, and like you said, when everything goes to hell, then the government steps in. But when Uncle Sam's pocketbook is leading the way, that is an inversion of what market forces are supposed to do. The government is supposed to be there to, yeah, I'm going to say it, bail you out, for lack of a better term. You meaning the economy. But when you're leading it with government debt, we already are at a horrific deficit, like into the trillions. And the whole thing with the Federal Reserve, with rate policy and so on and so forth. I've said it multiple times, and I guess it's worth repeating just because I love the sound of my own voice. Rate policy lives in the shadow of government spending. Okay. I think part of the reason you mentioned treasuries and mortgages spiked after the rate cut, which is true. Free data. Everyone's free to look at it. The only way that can happen is when the market doesn't believe that the entity, the central bank, is actually credible anymore. Okay, if you are messing with rates and the government continues to spend and spend and spend and spend until they drive this country into Argentina, then your rate policy is pointless. At that point, why have a central bank?
yeah,
God, I can't believe I said that. I don't
yep,
support that, for the record,
me
but
neither.
it's a question that needs to be asked. If your central bank is ineffective, then what's the point of keeping it around? Okay.
Yeah,
That's not the answer. The answer, obviously, is to stop spending like drunken sailors. Okay. And, for the last, oh God, I'm looking here. The last time we were consistently positive in terms of federal deficit was 2001. Uh, the events that led to that outcome are not to be repeated. Okay,
yeah,
I want to be very clear. That's not a solution. The solution, and what I sincerely hope this incoming administration does, because Lord knows none of the outgoing ones have, start reining in the purse strings. Okay, there's only three ways that you can get money on this planet. You either make more, you spend less, or you invest. Okay. Well, the government's been really good at spending more instead of spending less, and as anyone that pays taxes can attest, they're pretty good at raking it in too. Okay, but
yeah.
it's just not enough.
Yeah, that's the only
So,
good website the government has, right? All the government websites suck ass, but the IRS one, oh my god,
oh man,
it
yeah,
is
the
it
IRS
is
website,
nice.
they paid Silicon Valley's finest.
Exactly.
My God,
Everything
it's a
else is
work of
crap.
art as far as government websites go.
Yeah, exactly.
Well, let me float this. Let me float a stupid idea out there, and I know we wrote about it. We have a lot of problems,
Oh yeah.
obviously.
So wait. Before we get there, I know where you're
What's,
gonna go.
what's
So
that?
before we get there, though, so to sum up the election, right?
Okay,
To that point first, um, economically, both Harris and Trump have great ideas, right?
sure.
That we believe could help the middle class. And regardless of what either of them say, it's going to help, the 1% as well. So when people tell me, oh, they're going to help the rich, I'm like, both of them do. So
Yeah.
just look at the policies for you. So this income administration, like you just summed up, because he won, so we have to, know that it's President-elect Trump, and his administration with a Republican, more than likely Congress, and a definite Republican Senate, is that we hope that these lawmakers in this administration truly rein it in. right? We hear about these rumors of Elon and wanting to, to cut $2 trillion
The
from the
Doge.
government, the Doge, and all that, and then Trump wanting to cut taxes and extend the Trump tax cuts, as well as these tariffs, right? And these tariffs, I have a love hate with, right? I'm not a big fan of tariffs because it's just another
Right.
tax,
Yep.
right? And if anything, it isolates us. So I very much disagree with tariffs, but I think if it's done targeted and wisely,
Hmm.
again, keyword wisely, and I hope it's done wisely, then it brings people to the negotiation table, right? Because people have to remember in this world with tariffs, right? Other countries tariff us as well. Like that's
Yeah.
one thing people also have to have a knowledge of is they tariff us. So when you go to other countries and you wonder why there's not a lot of our cars there. I mean, I have to admit, Ford sucks. I mean, they're a terrible car, but I love America, but Ford, your cars suck.
Well, there's no
But
Chevys not a lot of Chevys
yeah,
overseas either. So
right. And it's not just cars. There's other things that we produce, right? That when they go to other countries like Japan, especially China, Europe, they put a heavy tariff on it.
yeah,
And that's a reason why that when you go to other countries, they have more of their stuff sold there,
of
right?
course.
So it doesn't matter if it's, some consumer goods, it could be cars, it could be whatever it is. It's because it's that much more expensive to import U.S. products.
Yeah,
So to the tariff idea, I'm sympathetic to. It's just we have to do it properly, right? Because we are a country that's more of a service and a consumer country. We consume
yeah,
things and are making it. And I get the initiative of making more things in America, and I would
yeah,
love that. I mean, you and I have driven a lot of policy, for the last two administrations to build more things here, and we
yeah,
love that. It's just we got to bring the cost down to build it, because the reason why we don't do it here because it's more expensive. So there's a balancing act, right? So I really hope that this new administration does it in an appropriate way, and they don't, misuse the ability to use tariffs as a negotiation tactic. So that's just something everyone know. It's like, yes, tariffs are an additional tax. It can be dangerous, but it can be used properly. And the only way we can tell now is through time, right? Let's see how this new administration uses it, and also don't forget other people tariff us. So,
yeah.
bottom line, they tariff the hell out of us.
And that's
I
something
think
that's conveniently ignored on the nightly news.
exactly. So again, we're not one side or the other. It's just we're focused on policy at hand here, and
Yes.
and yes, it is fact. Every country tariffs us and our products. So but we don't tariff them very much either coming in. But that's why you see so many of the products here, and we're fine with that. I'm okay with it. I love stuff from other countries. It's just there should be a balancing act. Like it should be a fair market across the globe. Is all I'm
Yeah.
saying, and that's where I do have some agreements there with tariffs. But again, we have to do it properly.
Well, you bring
Um,
up a good point of the tariff as a negotiation tool.
exactly.
And I'm gonna admit my ignorance when it comes to negotiation. That's why I get left in the dungeon while you do the handshaking. It's not my skill set. Uh, and that is something that needs to be addressed, especially since you said very eloquently, we don't make shit here.
We don't.
A
Yeah.
lot of that is regulations. Why is everything made in China? Well, because for the most part, the workers are fodder,
Right.
and they don't have the environmental
But
protections
also the
that we do,
tariffs are
and the
the
tariffs.
tariffs are different, right? I mean, the tariffs coming into China are really high, but yet we get stuff in from China is not tariffed.
Yep.
And again, the first term of Trump, people remember things were a bit cheaper. That
Mhm.
played a big role actually in negotiation tactic. Because we started producing more here in certain areas, but then China also lowered their tariffs of our
Yes,
stuff going out.
exactly,
So that
exactly my
created
point.
more jobs, that created more strength to the dollar. So it's major factors involved there.
Yeah.
So yeah. So sorry to jump. I
No,
just
no,
want to make it clear for
I
our
think
listeners
I
that
think
that
that's well
plays a
concerned.
huge factor, right? So I hope these policies that we support, right, which is targeted tariffs as negotiation, not just
Mhm.
outright putting 100% on it for no fucking reason. No, let's negotiate,
Because
right?
China.
Right, because again, we want a fair playing ground economically of products, the cost of products and services across the board, because that plays a fair playing ground, and that will bring costs down for us as Americans, right? Because the stuff that we import, which is most stuff, will get cheaper because they're afraid because their companies rely on our consumers. So that's the
Mhm.
one thing is you, the consumers listening, have all the power, right? So for America negotiating, we buy all their stuff. So it's like, hey, look, we're going to tariff the hell out of your stuff. So let's lower stuff. So that actually does play a
Yeah.
role and it actually strengthens the dollar, right? Because then our dollar is stronger because more stuff there to be negotiated. So we hope
Yep.
that happens. We do hope there is deregulation. Now, look, balanced deregulation, right? There is a lot of stuff that's stupid. We see it all the time. But there's certain things that need to be there. Don't get me
Yeah.
wrong, right? Because we do want clean water. We do want clean air. And also, we
So
do
does
want
Flint, Michigan.
right, and we do want BNP now to get their asses handed to them because it's stupid. And you know, and the right financial regulations, right? We do agree with that, and all sorts. And we do want tax cuts, but at the same time, all this is great. We got to pay the fucking bills, and we got to
Yeah.
rein in spending. We can't add more to the debt because that hurts America and its people.
Yeah.
And you know, because it adds to the yields, it puts us towards bankruptcy and all that because like you said we're paying 500 billion in interest payments, right?
Something like that. Yeah.
Yeah,
I know
so
the.
imagine if that 500 billion was used towards you know schools in America, towards
Oh, God
fixing
forbid
up,
we
yeah,
educate our people.
I know, towards education, you know, feeding, you know, the poor and like the people that truly need it. Like, if you're
Right.
healthy and you know don't have a job, figure it out. And then helping with our infrastructure, right? And
Uh
towards
huh.
good programs to help uplift communities. Anyways, I just want to throw in it because that's why we have to rein in spending, right? If we're paying 500 billion or so in interest payments, that's disgusting because that can be used for better. And that's, by the way, it's not the government paying. We're paying for that. We, the
Yeah.
people, are the ones paying those interest
It
payments.
is
And this is
literally your
why
tax money
right.
going through
This is
that.
why you need to make sure that you vote for people that address spending, right? And you can call them, by the way. Your congressmen and senators are the ones that you really need to talk to.
Yeah.
It's not that hard. 5 minutes, pick up the phone, right? Or send them a quick email, right? And if I tell people all the time, I've said this before in this podcast, other podcasts, in the media, if a congressperson gets a dozen or a couple dozen calls, they all of a
Or
sudden get
email.
yeah, or emails, they get puckered up because
Yeah.
that to them goes, oh, okay, there's a specific issue that's a problem, and
Yeah.
they have to address it because they know. Because end of the day, people, you know, fuck all this deep state stuff and all of these, you know, conspiracy theories, right? That people put out there in social media. If there's 100 votes in that particular, that says 100 votes, right? You 100 people have all the power. They answer to you because if you 100 people, let's say 51 of you don't vote for that person, they're out.
Yep.
So I just have to reemphasize that to our people, knowing that you have the fucking power, right? Because they need your vote because they can't sit there anymore and have your vote. So hold them accountable. Anyway, sorry, I just want to throw it in
No,
there.
I mean honestly, if the way I see it, if you got 2 or 3 minutes to bitch about it on social media, you got 2 or 3 minutes to bitch about it to your rep.
Yeah, simple as that.
That's do you want to bitch about it for likes or do you
Yeah.
want to bitch about it for change?
Yeah, and
Those are
that
your
comes
only
from working
options.
with congressmen. We work with politicians every day, and I can tell you now, you give them a dozen or a couple dozen calls, they're going to start listening to it
Yeah,
because they know shit. My constituents are not happy, and I'm not going to win re-election if I don't, um, you know,
appease
do
us.
this to appease them.
We
Yeah,
are your overlords.
exactly. So we have hope with this administration on the economic side.
Yeah.
We hope that they do that, but hopefully they also rein in spending and look with Powell, you know the switch to the Fed cuts. You know they
Mm.
cut 25 basis points. I thought his press conference was a little static. But the two things that concerned us was one was I did appreciate him standing up, saying, "Look, the president can't force me out," and I agree with that. The Fed
Right.
needs to be an independent arm, but at the same time, we don't really like him either. So it's kind of like a, because we need someone with balls, like a Volkner, right? Because Powell has it. He's been too timid, in our opinion, with how handling it, and he shouldn't be influenced by Biden. He shouldn't be influenced by Trump. He shouldn't be influenced by anyone. So, like, it's a balancing act, right? But we do need someone that's a Fed chair who has the backbone to say, okay, all right, I don't care what the president says. I need to do this. But at the
Yeah.
same time, the president also needs to support the Fed chair as well, right? You and
Yeah,
I
that was
talked
the
about
only way
this.
Volcker was able to do what he did. Reagan had his back.
Yeah,
Powell hiked. Well, I think it was after the first or second 25 basis point hike,
yeah,
and he gets dragged into Congress, and a certain senator from a certain Northeast state, wagging their finger like, "You're gonna kill jobs." Like,
yeah,
well, congratulations, assholes! You did it anyway, and you did it by not addressing
yeah.
inflation, which is the fundamental issue. And I think for those who don't know who Jim Carville is, he ran Clinton's '92 election campaign,
Yeah,
and he had one of the best phrases ever. It was like, "It's the economy, stupid," you
yeah.
know, and that's kind of something that people occasionally forget until things get really awful. Well, what I'm seeing is I think the bill is starting to come due in a lot of ways for the mistakes of the past couple years. Like, yeah, the Fed cut. Fed's not the only central bank that's cutting rates. Like, I think we're entering a global phase of easing, which is kind of dumb because, again, inflation not addressed.
Yeah.
I'm going to keep coming back to that. But the problem I see is that a lot of the cracks that we're seeing, I don't think are going to get fixed anytime soon. So okay, so I think it was Nissan. Yeah, here I got the headline: Nissan cuts 7% of its global workforce and chops the manufacturing capacity by 20.
And by the way, they're
Now,
first of many. I mean, there's been
yeah,
hundreds
this is not
of
new.
hundreds of companies, and not just small businesses, but small business probably in the thousands, but hundreds of companies and dozens
Yeah,
of big ones have been slowly cutting jobs, right? So
yeah,
and media hasn't really covered it. So there's been more and more job cuts in addition to participation rates at all-time lows, meaning people
yeah,
quit looking for jobs, part-time jobs all-time highs, and people with 2 or more full-time jobs at all-time highs as well. So
yeah,
it's so end of the day, I don't care who the administration is; they're fucking naive or blindsided, right? What Harris, Trump, Biden, Trump, whatever, whoever's going to be, they're not addressing it.
of
Like they're pushing for prosperity, which is great. We want that,
course.
but I think Trump has good ideas. The reason why I'm saying Trump because he won. But how can you balance it? But then the biggest problem is the Fed chair and the Fed board. So the Fed chair is ultimately the key person here. The Fed has no faith from the people or Wall Street or the markets.
Hmm.
And we just, in my opinion, need a better leader. I think Powell, to his credit, I think he's managed to the best he could. I
Yeah,
thought he had some creative thoughts on how he's going to approach this because he didn't want to, drag us too much. I don't know. Like he kind of did okay. People too much. Oh well, Warren Buffett gave him credit. I'm like, yeah, he had to, right? I'm like, Warren Buffett's not a, it's like, he's not gonna. Warren's gonna stay neutral. Us, on the other hand, we don't give a fuck, right? Like
I
we
think
have our
Powell was a good
opinions.
crisis chair.
Right. He was good crisis chair, but now we need a new chair that comes in that has like someone like you or I, right? To have that backbone of not giving a damn, saying, okay,
Are
look,
you throwing your hat in the ring for the new Fed chair?
I don't know. I may run for president for 2025 or 2028 or 2032. So who knows? But no, I mean, but now is the time where I think Powell did a good job toward that transition. I agree with you, right? He was a good crisis chair, but now we need someone to come in and go, okay, walking in with like hell's bells, ACDC, and go, listen, to save this country and its people, I got to make the tough decisions. You have my back. If not, fuck you. I got to do it. So because technically the president cannot remove a Fed chair
Right.
for legitimate reasons. There has to be a legitimate reason that's like that's very narrow. But you need that, right? You need a Paul Volcker that can come in and go, look, we're going to have to hurt for a little bit, but would you rather hurt for the next year or two, or to hurt disastrously for forever? right? It's like we have to address this now, and I'm going to address it now. And America, I'm sorry, but we have to do this. You can blame the people before me. I just have to fix it, and you'll thank me later. So
Well, you
that's the
want to
type
talk
of
about
person we need.
you want catastrophe? We, for the second time in history, and again, this is on our TwitX. Uh, Look it up yourself. For the second time in history, our deficit spending has gotten to the point that our interest payment on public debt exceeds defense expenditures.
Yeah, and that's
If that
scary.
doesn't terrify you, you're from another planet.
Yeah,
Like,
and again,
yeah, like a properly functioning economy is a national security requirement. All right, and yeah, you're absolutely right. It needs to go beyond just the headlines and the open market committee meetings. Like, we are the world's reserves currency. We should kind of frickin' act like it. And the level of irresponsibility that's been had in managing inflation in the past couple of years, quite frankly, borders on criminal. Not that I'm a lawyer, but if I were, I would make that
yeah,
accusation. I mean, you have job openings that have fallen consistently since their March 22 high, and every jobs report gets revised down. So at some point, why bother releasing the data at all, or at least delay the damn thing, or I don't know, do your job. You know, businesses are contracting. You have layoffs across multiple sectors. And I mean, yeah, I just said Nissan because that's the most recent. And you can't say, well, but that's Nissan. Like, I don't give a shit. I personally don't think Nissan has made a good car since the Hakoska Skyline. But that's not the point. The point is that when 7% of the workforce are now out of a job, when you have an upswing of over 1.6 million Americans have been unemployed for at least 27 weeks. I mean, think about that. Almost 7 months or more, because 27 weeks or over is the data set. 7 months or more without a job,
yeah,
like, that should terrify people. And,
yeah,
and every single time you get that ramp up, it's a recession, like, without fail. That's the last 11 recessions that we've had. You have seen that behavior.
yeah,
We are above levels that predated '08 in terms of
yeah. And
unemployed
that's the
for at least
thing.
7 weeks.
In every recession, we always bounce back from it. So I don't know why people would fear pushing a recession because it's like, I mean, we know why. We explained it, right? Politics and all that kind of stuff. But
Yeah, yeah, of course.
to me, as a person, as someone who loves this country and cares about people and be able to afford things and want to drive economic prosperity, I don't get it. I don't understand why you're afraid. It's like, yeah, it sucks, but the key to being a leader, whether it's a president, Fed chair, or a Congress, whatever, the key to being a leader is you have the responsibility to make those tough decisions and to take those bullets,
Yeah.
but then be thankful later. Like the greatest people that were remembered in history are the ones that had to go through those, make those tough decisions, get criticized, but then praise later. Right?
Yeah.
It always happens. It goes all the way
You
back
think you need
to
long-term vision
yeah,
for leadership as well as investing.
yeah, exactly. I mean, that's
After that,
yeah,
holy cow.
I mean, and that's our investment philosophy, right? It's like they're, and how we preach investing. And look, our fund is up over 40% year to date. We've doubled the S&P,
Again,
right?
over 40%. We're up
Again,
over
right?
40 last year, too.
Yeah, multiple years. And even 2022, when things were bad, we beat the S&P. And so we've beaten the S&P every year. The past 2 years, double. Our fund is almost at 100% lifetime return. And the reason why we do this is because we understand these underlying issues and we're real with things. We're not, those people on Wall Street that are naive or they just follow what their fucking bosses say, right? Or they're just living up to the hype and following the trend, right? We don't like trends. We go, okay, all right, okay, everyone's going here, but why? It was
And I'm a
validated,
fashion leader, but
right? It was validated. Okay, we'll buy in. If not, no. We like to look at things that are going to be good, not only so the way we invest is we look at it, okay, from 12 to 24 months or more out. That's how we invest, right?
yeah,
We don't look at a company and go, oh, it's going to be great tomorrow. Okay, no. We look at it, okay, company A, let's look at their numbers. And then we look at geopolitics. And then we look at the economy, which is what we just all talked about in the past 40, 50 minutes. and then we go, okay, how are they going to look in 12 to 24 months,
Yeah.
right? And then there's times where you and I just go, okay, we like the company, let's buy now. We'll do some research as we hold it, and then go, okay, maybe we should sell it or maybe we'll hold it, right? So there's times in where you also have to do that and where you have to buy quick,
Of
right?
course.
Just to make sure, because you want to buy in late and then go, okay, in 12, 24 months, how do they look? And that's how we invest. But a lot of these guys, they don't always go buy, or they're day traders and all that, and it just doesn't make sense to us.
Yeah.
And this is why we have a problem with Wall Street. Now, to the flip side, for those listening that are the average Joe with 401ks or some money to invest, they always come to us with what our thoughts are. Again, not financial advice, but what we would do, right, is always keep in check with your 401k, right? And the best thing to do is invest in the S&P 500, right? Regardless of what happens, right? The S&P 500 is a 45-degree angle upward, right? Since every recession, everything, it's like a heartbeat. It's like a heartbeat, right? It always goes up and down, but overall, you're still living, right? So
I
you're
hope.
still alive. You're still alive. Maybe not the best analogy, but um, it's
Well, if your heartbeat keeps going up, I think you have AFib.
yeah, you may have AFib, but in any regard, sorry. If you look at the chart of the better example is this. Sorry, this is what I was thinking of is life, right,
Yeah.
and success in life, right? How your life is, you look at your life to date, or anyone you admire, right? If you look at their life, it's up and down. Like you see the success from the outside. You see
Yeah.
how they've done things, or people perceive you as successful in doing all that, right? But they don't see the path you took. And the path you took is fucking rocky, right? It is ups and downs and storms. Now, don't get me wrong, there's many moments of glory, right? And sunshine, all that, but it doesn't stay that way all the time. It's just the same thing with the stock market, right? You see it go up 45. If you zoom out, it's a 45-degree angle. It's a great American economy success story. But if you zoom in, man, there's some rocky moments. There's ups and downs, right? Ups and downs constantly. So reason why I say that is, we always believe in putting money in. I mean, we do too, personally, all the time. We always put. People go, yeah. I mean, I invested. Our job is, I mean, that's our livelihood. We are investors, but we
We
have
kind
the
of have to be
time.
good at it.
Yeah, we kind of have to be good at it. But even then, we still put money aside to put in the S&P 500. We prefer Vanguard, S&P VOO, but there's other ones like that. But pretty much what you're doing is just putting money into the biggest 500 biggest companies in the world, in America. Like you're literally investing in America,
Yeah.
and it's never failed, and it's always gone up. And it's, to us, in our opinion, the safest investment possible. So if you have a couple $100 laying around, or even $50 or whatever, open a free Robinhood account, right? And just keep putting it to every month, whatever you can. Just let it sit there, and don't look at it, right? There's gonna be moments or a year where it's gonna look like shit, but then
Yep.
you regret it because 10 years down the road, it's gonna be up like 1,000%.
Yep.
So that's the key thing you have to look at. But again, it's not financial advice, but something to look at. And then if you do have a little time, you want to invest a little bit, because I know Robinhood, everyone thinks they're a fucking investor now in the TikTok era. Just do your homework. Do your homework. You
Yeah.
have to know the company. If you
Wall
can't
Street
name
Bet
the
subreddit. Oh
right, if
wait.
you can't exactly, if you can't name the CEO, if you can't name the revenues the past couple of years, if you don't know what their plans are in the future, if you can't explain to me the economic reasons, if you can't project things on why in the next 12, 24 months of that company, then don't buy it,
Yeah.
right? Don't invest in it. So you have to be able to know these things to be able to know. Is that because it's not because you say, oh, everyone's buying it. As soon as you say that, you lose credibility,
Well, then it's
right?
priced in.
Right. Because there's a lot of
And
companies that we invest in that people go, oh, wait, what company is that?
well, they
Like,
haven't even heard of them.
right. Even seasoned investors we talk to go, wait, what?
Yeah.
Meanwhile, we have 100% return on them,
Yeah.
right? Because like we know they're producing things that are needed. Their books look great. They just brought in 3 great board members, and then the next 12 to 24 months, they're about to 3-4x their revenue. So that's how you look at things.
And I would only add, in the tone of Kevin Spacey from Margin Call, when he's having the last big meeting when everything's going to hell. And just one more thing, no technicals. right? Because you bring up a good point that you actually have to invest and not trade, and there's a lot of garbage out there that people love to seem to fall into. It's like, well, the if you look at the simple moving average, we're in a golden cross, and we have this don't you cloud or what? No, just shut up.
Yep.
Read the actual fundamentals. Like none of the charting crap matters if the underlying is fundamentally flawed or worthless. That's why,
Yep.
honestly, it's one of the reasons why we don't invest in crypto because
Oh God.
the underlying fundamentals are worthless. I don't
Yeah.
give a damn how clever you are. Uh,
Yep.
but these are good points. I think you need to bring up again that patience is a virtue. Uh,
Patience is
I
virtue. We
I,
mentioned in
I
our
want
Abolishing Nonsense podcast about men's mental health. We say it all the time in investing. Patience. Well, patience is the key thing in life, right? I mean,
to.
nothing's going to happen overnight. And whether it's your personal relationships, your job, promotion, or your goals you have with fitness, anything in life, it takes time and patience. As long as you're consistent and working at it, then
Yeah.
you'll succeed. But you
Well,
gotta be
discipline
patient.
trumps motivation every
Yeah.
time.
Yep. Discipline, hard work, and patience, you'll get there. Um, so all the things that we've taught our listeners what they can do. Now,
Hmm.
what can the government do and stop being fucking morons and getting their shit together? I know for us,
Exactly that.
when I run for president and you're my chief of staff, I'm
God
joking,
save
guys.
everyone.
I know I'm joking, guys. I'm joking. I mean, uh, you know, uh, surprisingly, I have been asked, by the way, for the future's leaders of whatever that group is. I forgot what the hell they are, but they're like the future whatever. But I've been asked, and I'm like, to be a potential. I'm going, I don't know. So,
Oh.
if we had a policy, I know one of the things that you and I have pushed out an idea, and you
Hmm.
can find on our garrisonfathom.com website. We pushed this idea out, or on our X feed, is a sovereign wealth fund.
Hell
Um,
yeah! Now we're talking.
Willie, do you want to explain, in high level, because we have limited time here, but what's your thoughts on, like, not thoughts? What was the idea or the principles we put together in a sovereign wealth fund for America?
Oh hell yeah! So honestly, and for those who don't know or are not familiar with it, sovereign wealth fund or a sovereign investment fund, it is what it sounds like. It's an investment fund just like any other fund, except the country owns it. And there are real examples of this. China have one. Norway, I think, have one just for the pensions.
Yep,
But it's the government investing in stocks, bonds, real estate. More importantly, in my mind, precious metals,
yep,
critical and rare earths would fall under that because they're pretty damn precious since they underline most of our technology. And you know, the whole point of that is to apply what we're talking about in terms of long-term vision of investing, but on a massive, literally national scale,
yeah,
which is kind of awesome.
yeah.
Uh,
And the first way we would attack it is with Social Security, right? You
yeah.
know,
Oh yeah,
back FDR and the administration, all that with the Social Security, right? It was a great idea, but it hasn't evolved, and that's the problem with Social
correct.
Security, right? It truly hasn't really evolved. Is it okay? Everyone's paycheck goes into that kind of stuff,
Yeah,
but it hasn't. The key to anything, an idea or launching a first product, is to evolve it, right? It's like
correct,
you want to innovate it,
correct.
and we feel it's time for a major overhaul, and some progressive, innovative thinking on something with America with a sovereign wealth fund. So for us, it's not just America's money, right? I know Biden was floating idea, like was opening to the idea.
Yeah,
Trump is open to the
both
idea, but
both camps have
both
been receptive.
camps.
That's important.
Harris was as well. But the problem is the ideas were limited, right?
Yes,
And it was more about just launching a separate fund in general. Our
right.
approach is taking Social Security, right, and investing for the people. It's like a 401k. It's like, you live in this country. We're a country of wealth. We need to create more wealth, right? We talk about being the first world country, the premier country, and we are. But we also need to progress it forward, right? There's many other issues too, but we're focused on this matter. Everyone that works pays into Social Security. Okay, you already do that. It was the Vaughan Cost administration. We would drive
Fun
a
of that.
mandate. We would drive a mandate that would convert Social Security into a sovereign wealth fund that is
Mhm.
managed for the people, and that's it. Government cannot lend against it,
Yep.
cannot use any of that money because it's your money. You're
Correct.
taking money that you're required, like the money is taken out. So we the government have a responsibility to take your money and to manage it properly so that when you retire and you get your checks when you retire, Social Security checks, it's worth it's there, still there, because right now it's projected to expire in 20, like to run out in
It was
2035.
2035 from the Social
Yeah,
Security Administration's own projections
right.
when it
So it's going
becomes
to run
effective.
out. But you also shouldn't worry about that running out. You should have that check guaranteed, but maybe you should get more out of it, right? You
Yeah.
know, if the S&P 500 can grow over time, why can't your Social Security? Because right now it's it's managed like shit. It's horrific. So what we would do is we would convert it into a sovereign wealth fund. The people's fund, we can call it, whatever it is. And every time your money
Managed
gets
by The Rock.
contributed, yeah, and the goal of the fund, right, is to meet a minimum standard return, right?
Yep.
It's let's say 8%. Even at 8%, wow, fantastic. And the compounding would be
Yeah.
phenomenal. It'd be very de-risked, right? We would have very strong policy, to prevent Wall Street fuckheads from gambling with that money, right? And that it's managed appropriately, and that it's a long, steady growth with compounding. Because okay, great, you can get we get 40% returns, well, great, but we want to de-risk as much as possible. We are very
Sure.
de-risked as a fund, but we
Yeah.
want to make sure it's even more de-risked with the people's money. But there's a way that we can do that. So, I mean, obviously, this is just an ideal that we put together that we're writing about. We hope to propose it to Congress at some point through one of our groups. But we think that this could turn things around, not only for the country but for the people. Because imagine, let's say in your lifetime you've contributed, let's say $10,000 in your Social Security, but
Hmm.
over time, because you're not done the math, right? I mean, in 30 years, let's say you work for 30 years, right? At 8% compounds, that $10,000 would be what? I know you're doing the math right now. Uh,
You hear the clicking.
yeah, I know you have thousands of spreadsheets for all this stuff. So let's say at $10,000,
Yeah.
right? Total
ten
invested over
thousand
eight.
dollars over 30 years at 8% will be 100K, a little over
So
100K,
imagine that, right? Imagine
and that's not counting what you continue to put in because you
exactly.
continue to get paid. I assume.
Yeah. So imagine that. So it's not just what you put in, but it's you're going to return an investment for it. And
Yeah.
to me and to us, that will provide additional prosperity for it. Like, okay, tax cuts, all that, great. But I think people generally don't mind paying taxes if you get a better return for it. Um,
Absolutely.
and I don't think people mind paying Social Security if they get something for it. So I think that would be one of the biggest ideas that we will push, but actually execute on. And I
But you
think
bring up great points too, though,
yeah,
in terms of protection, because one
yeah,
of the biggest arguments against a sovereign wealth fund is that it basically becomes a presidential slush fund. Okay, so
no, it would
you
not.
hit it right on the head.
Yeah,
Thou shalt not touch.
no.
Uh, Period.
And
And
that'd be in the legislation. No, thou shalt not touch. It'd be managed by the Treasury Department,
yep.
and the Treasury Department be independent from like there's no, it's independent, right? And it's managed by a guy with long slacks, with the
Who
black
wears
who,
brown?
who wears
Only
brown
brown suits.
brown shoes, someone that is a boring investor. You want someone that is responsible, and that can be vetted by the Treasury. So,
Yeah, of course.
or Congress can also vet them too, right? So there's many checks and balances that you could put in, and that I know we're working on it, but I think the people would buy in 100%
Yeah.
into this, and that to me is the only way you can save Social Security and really take a step forth into a prosperity. Like we're a nation that needs to prosper. right?
Absolutely. We need
And
to
that's
innovate too.
we need to innovate, and that's a key step into doing that. We pride ourselves in being a wealthy, healthy country, but we got to start looking, acting, and doing that.
Yeah.
Um, so,
Well, I mean, you
so
bring up a good point, and the fact is that there's no other way to address the deficit, right? Without something like a sovereign fund. Okay,
mhm,
you can't this whole tax the rich. Look, in the 1940s, the top individual income tax bracket was 94%. It didn't
mhm,
do anything. Like, should
nope,
we increase the maximum tax bracket over 100%? Should we make it 200%? Should you have to pay taxes on money you didn't even earn? It's this closed-minded mentality that I think is absolutely ridiculous. And the only thing it does is hinder our ability to prosper as a country. It's destroying our social bonds because it's always us versus them. And again, you hit it right on the head. We're the most powerful freaking country on earth, damn it, and we need to act like it, and we need to stop with doing the same thing over and over and expecting a different result. I mean,
yeah,
Einstein called that insanity, and he was a pretty smart guy, so
yeah,
maybe he was onto something. I would
yeah.
actually, I mean, want to talk about radical? I wouldn't mind if someone floated a proposal for having a public-private partnership with a sovereign wealth fund, because the first thing anyone asks, well, how are you gonna fund it? How are you gonna get the initial
Well,
seed? You
yeah,
can't borrow, so okay, businesses repatriate your money, become shareholders in the sovereign wealth fund. Why the hell not? Why not open it up to individual Americans? You
yeah.
mentioned Social
Or
Security.
even that. It's like for the next 5 years, we'll take 10% of tax money revenue and put it in as an initial investment in a
Huh?
sovereign wealth
See, there
fund.
you go. That'll work.
We'll do that because the only problem I have with the private public partnership is these Wall Street guys tend to, again, we're
Yeah,
friends with them, we
screw it
love them,
all up.
but yeah, so we want to keep it a little bit balanced there. But and we can diversify and everything like that. But there has to be a structure, and we'll work on it and we'll propose it. Vong 2032. I'm joking, but I think these are the ideas that need to be pushed out, and I think our generation, the next generation, I think can grasp it and understand it, because this whole every cycle, same thing: raise taxes, cut taxes.
It's their fault. No, it's
It's
their
their fault.
fault.
It's their fault. It,
Give me a
it's
break.
it's it's time to end the bullshit, and it's time
Yep.
to push forth actual, real ideas, and to also bring accountability to we the people. People have to vote accordingly. If you have time to scroll for 5 minutes on the toilet, send an email on the toilet to your congressman, right? I mean, so it's both, right? We need to drive more innovative ideas in order to become better. America, we have to evolve. And again, we're talking about economics here. There's other issues I know, but our focus is economics. But to me, when you drive better, uh, a better economy and more people prosper, you can address the other social issues and matters
Yes.
better. Um,
Yes. Every social issue can be solved with money.
pretty much, yeah,
Yeah,
absolutely,
yeah, absolutely. And
yeah.
that's the only responsible way to go about it.
Yeah, people are less miserable. People are going to be happier, and have a better, clear mind, with everything when they don't have to worry about starvation or paying the next bill or living on the streets because they
Yeah.
can't pay their rent and mortgage. With that, we thank our listeners. We continue to grow our listener base. We appreciate the love. Please share our podcast and again, continue to ask us questions, DM us, all that. I know we got plenty of them, and we'll help address those questions on our podcast. But this is a special one because of what's happened the past week.
Hmm.
But yeah, thank you all.
Thank you, everybody.